JJ Kinahan, Chief Market Strategist at TD Ameritrade. What do you make of the volatility we've been seeing? We opened in the markets lower, then touched positive territory. Now we're back in the red by about 1%.
Yeah, it's been great trade if you're somebody who's trading as an intraday type trader. For the longer term investor, I would say it might be a little bit of noise and look for opportunity in there. But, bonds, everyone's talking about yield being the sort of thing to blame, if you will, for what's happened. And I find it very interesting. It shows why investing psychology is so crazy. 3 months ago, you and I were talking, what we all said, we're going to get higher rates, we're going to get higher rates. We need higher rates, we want higher rates. We have higher rates. Oh my God, now it's something the whole world is afraid of. So I find that very, very interesting as part of it.
So perhaps an overreaction.
Well, we'll see. Yeah, perhaps it is, because again, this is kind of what everybody wanted. Now it pushes us up to more than a 75% probability of the Fed actually raising rates. But I think the last thing that's really come in here, particularly over the last, Friday and today, was the whole concept of maybe that fourth rate hike and the inflation pressure maybe starting faster than people thought. Now the Fed talked about it not at this meeting, but the meeting before, that when inflation comes, it may come in an exponential fashion. The wages being up the greatest we've seen year over year in over 7 years. The fact that energy, I know it's had a rough time here the last couple of days, but that energy's gone up so much over the last month or so. I think there could be something to that, and that's really what has people nervous. Not the fact that rates aren't necessarily going up, but the Fed may have to raise a lot in a hurry to fight inflation.
Now, the S&P 500 is down 5% or so from its high on January 26th. Is that a good buying opportunity? Some are saying, hey, wait for the full 10% correction.
Well, as you reported on all last year, Scott, they didn't really get that opportunity last year. And people who are the sort of buy and hold mindset, we'll see if we saw them come in earlier this morning, basically, right? They ran this market up. It's failing again. Well, I'll be interested to see if we can hold here through the close, et cetera, or if there's one more wipeout on the S&P 500 later this afternoon. Now, I think if you're saying this is the exact level I buy at, we've talked about this before, particularly as a retail trader, it's a little difficult. Say, here's where I'm going to be, but start a little bit above that level, and if you get the opportunity, you buy a little bit below that level. So if you want to buy down 10%, maybe you start nibbling at 5, 7, 10, 12, 14, so it averages out to a 10%.
And it's interesting to see TD Ameritrade's investor movement index come down a little bit. Also during the month of January, your clients bought stocks like Amazon, GE, and Facebook.
They did, and overall the exposure to the market came down almost 10%. And what's interesting to me about that is it shows a couple of things. Number one, I don't think that necessarily people fully understood earnings, because with the tax plan stuff in there, it's a little confusing to see what that actually means long term for many people. So that played in it. We do have the rate thing, and the tax plan affected the individual investor, not the person who held things for a longer time. But if somebody bought something in the last 6 months or so, they probably wanted to wait till January to sell it, so their personal tax rate was lower on short-term capital gains. So I do think there's some of that factor in here that people aren't talking about also. So what I would say, Apple, Facebook, Microsoft, as you said, sort of the things that people trust longer term, and if we're going to have runway, they seem to be the ones. And one, people will say GE. Well, why would your clients buy GE? If you're an investor, what are you told to do? Buy stocks when they're getting beaten up if you're in it for the longer term. To me, GE is the ultimate example of that if you believe that their new CEO is going to be successful in his plans.
All right, JJ Kinahan, thanks for helping us navigate the volatility.
Thank you, Scott. Always a pleasure to be here.